Have you ever stared at your bank statement, seen those mysterious fees, and wondered if there's a better way to manage your money and grow your wealth? Or perhaps you've felt overwhelmed by the sheer number of investment options and jargon thrown at you by traditional financial institutions. For decades, the financial landscape was dominated by traditional banks, the towering brick-and-mortar buildings, the friendly tellers, the seemingly endless array of accounts and services. These institutions have been the backbone of our financial lives, handling our paychecks, mortgages, and savings. Think about the Big Five in Canada: RBC, TD, Scotiabank, BMO, and CIBC, their household names, deeply ingrained in our perception of banking. They offer a comprehensive suite of services, from basic checking and savings accounts to loans, mortgages, credit cards, and even complex wealth management products like mutual funds and GICs. There's a certain comfort in their established reputation, their physical presence, and the in-person support they offer. You can walk into a branch, speak to a financial advisor, and feel a tangible connection to your money. Their extensive ATM networks and physical security measures also provide a sense of peace of mind for many. However, in recent years, a new contender has emerged, challenging the very foundation of traditional banking, the fintech revolution. And leading the charge in Canada is Wealthsimple. Wealthsimple isn't a bank in the traditional sense. They don't have physical branches or print checks. Instead, they operate as a technology company, focused on delivering financial products and services through a digital-first approach. They're registered as a portfolio manager and investment dealer, regulated by bodies like the Ontario Securities Commission and the Canadian Investment Regulatory Organization, CIRO. This fundamental difference in their operating model leads to a vastly different experience and a distinct set of advantages and disadvantages when compared to traditional banks. So, what exactly is the difference between Wealthsimple and multiple banks? It boils down to a clash of philosophies: the established, comprehensive, often fee-laden world of traditional banking versus the agile, low-cost, technology-driven realm of a modern fintech like Wealthsimple. Let's break it down across several key areas. First, let's talk about fees. This is often the most striking difference. Traditional banks are notorious for their various fees: monthly account maintenance fees, ATM fees, especially out-of-network, transaction fees, overdraft fees, wire transfer fees, and often high management expense ratios, MERs, on their mutual funds. These charges, while seemingly small individually, can add up significantly over time, eroding your savings and investment returns. For instance, a typical balanced mutual fund at a big bank might have MERs around 2% or more. This means that for every $10,000 you have invested, $200 or more goes to fees each year, regardless of how your investment performs. Wealthsimple, on the other hand, prides itself on its low-fee structure. For self-directed investing, they offer commission-free trading for Canadian and U.S.-listed stocks and ETFs. This is a game-changer for many investors. While there are currency conversion fees, typically 1.5% for CAD to USD conversions if you don't have a USD account, which can be avoided with certain premium tiers, these are generally more transparent and often less impactful than the cumulative fees at traditional banks. For their managed investing service, Robo-Advisor, Wealthsimple charges an annual management fee that ranges from 0.5% for accounts under $100,000 down to 0.4% for larger portfolios. This fee is significantly lower than typical mutual fund fees. They also aim to use low-cost ETFs in their portfolios, further minimizing embedded costs. This emphasis on cost efficiency means more of your money stays invested and works for you, accelerating your wealth growth over the long term. Next, consider investment options and philosophy. Traditional banks offer a wide range of investment products, but they often steer clients towards their proprietary mutual funds, which, as mentioned, can come with higher fees. They also offer GICs, bonds, and often have in-house financial advisors who can help create a personalized investment plan. However, the advice might be tied to selling their own products, and the investment strategies can sometimes be more conservative or less diversified than what's available through modern platforms. While they offer self-directed brokerage accounts, the trading commissions can still be a barrier for frequent traders or those investing smaller amounts. Wealthsimple's core strength lies in its investment offerings, particularly its automated investing, robo-advisor, and self-directed investing platforms. With their robo-advisor, you answer a few questions about your financial goals and risk tolerance, and Wealthsimple builds and manages a diversified portfolio of low-cost exchange-traded funds, ETFs, for you. This set-it-and-forget-it approach is ideal for new investors or those who prefer a hands-off strategy. They also offer fractional share trading, meaning you can invest in expensive stocks with smaller amounts, making investing more accessible. For more experienced investors, their self-directed platform allows commission-free trading of thousands of stocks and ETFs. They also offer more advanced options like options trading, margin accounts, and even crypto trading, a product rarely offered directly by traditional banks. Wealthsimple's focus on ETFs and diversification aligns with a modern investment philosophy that emphasizes lower costs and broader market exposure. Accessibility and user experience are another crucial differentiator. Traditional banks, with their physical branches, offer in-person customer service, which many individuals still value. You can walk in, deposit cash, get a bank draft, or discuss a loan face-to-face. Their online banking portals and mobile apps have improved significantly over the years, offering features like online bill payments, e-transfers, and mobile check deposits. However, the user experience can sometimes feel a bit dated, and navigating complex issues might still require a branch visit or a lengthy phone call. Their hours of operation are also typically limited to business hours. Wealthsimple, being a digital-first company, excels in user experience. Their mobile app and web platform are renowned for their intuitive design, ease of use, and streamlined processes. Opening an account, setting up recurring investments, or executing trades can often be done in a matter of minutes, entirely online. This convenience is a major draw for younger generations and anyone comfortable managing their finances digitally. While they don't have physical branches, they offer customer support through various channels, including email, chat, and phone. They also boast features like instant deposits and instant withdrawals, though the latter may incur a fee. The accessibility extends to their low or no account minimums, making investing achievable for almost anyone, regardless of their starting capital. With that said, thanks for watching and until next time.